Today, Tesla had terrible delivery numbers, and yesterday I ended up getting calls for May, which I'm down about $2,700 or 27% on. Now, the thing that you need to understand is that I am a quant trader, which means that I trade only patterns and I trade only data. I'm not talking about CPI, Fed, none of that. I'm saying that anytime that there is a specific pattern in play, I am going to take that pattern no matter what happens. And the reason that I do that is because if I'm going to trust in my numbers, I have to know at the end of the day that anytime I see X pattern happen, all my requirements are met, then I have to take it. But my goal in this video is to go over the delivery numbers, which were pretty bad. I want to talk about technical analysis on Tesla, and we did actually hold this order block for now, and we're going to be going over what my plans are with my actual position. My name is Peter DiCarlo. I've been a full-time trader for the past 9 years. I run a trading community, and I've worked with over 12,000 students in my lifetime. I'm not here to tell you what to do. I'm only here to share with you guys what I am doing. You can see so far, year to date, since January, we are up $475,000 with a win rate of only 65%. I am not perfect. I definitely have losing months. And I want you guys to understand that if you're going to be following anything here or even listening to me, you have to understand that you're going to lose. Professional traders, they understand this. As you can see, I am only ever looking for a win rate of about 65 to 75%. There will be months where you're down. There will be months like all of February where we made 138,000 and all of March where we close out 120,000. But what you have to understand is that profitable trading will incur losses. We are not in control of delivery numbers, economic data, or whatever is going to happen. The only thing that we are in control of is when we're getting in a trade and when we're getting out of a trade. So let's go into our daily journal and let's look at the position that we took on Tesla. Now, the first thing I want you to understand is that we did end up closing out $14,000 worth of profits today, but that's realized. A realized profit or a realized loss means that the positions are closed out. For instance, here on these calls for Tesla, we're down about $6. We're down about $2,700. But the reason that you don't see the loss is because this position is still open. As you can see, the position that we ended up taking was 517 $175 calls. The reason that we ended up taking that is because we had multiple bullish harmonics in play for Tesla. We went with 10 calls, we paid $6 in commission, and we had an average entry price of $11.95. I want you to realize that relative to my net worth, relative to the allocation capital that I have each and every single day, this is a very, very small position. My superpower is in focusing on playing not 10, not 20, not 30 trades, but being able to trade 100 to 200 trades over a given amount of time and prove that we can become profitable. I don't care about the next couple of trades. I care about how these sequences and patterns play out over hundreds of positions. Our profit target was $188 with a stop loss of $160, which we have not hit yet. So at this moment, yes, we're down, and I'm not going to average into this. Realize, right? At this moment, I'm down $2,700. Alone today, that was just one or two of the trades that we ended up closing out for a winner or a loser. I'm not taking everything that I have and loading it up into every position that I take. Even if I only had $5,000 to $10,000 to work with, which we go over how to do that in our academy, I'm only ever carrying 1 to 2 trades at a time. And the max that I use for options of the entire $10,000 account is only $500, which is 5% of the account. I see so many people here who are like, oh, he's going to be on suicide watch. Or if you're trading like that to where you are getting emotional, you're trading with too much money. And I don't mean numerically. Even if it's $2,000, that might be a lot of money to you. And if you're emotionally attached to the trade, then that means that you're emotionally attached to that money, and that means that you should not be trading or investing with that capital. Or it could mean that you just don't have a system and that you have no real way of knowing what the hell you're doing, and you know that deep down that you're kind of just gambling. So let's briefly go over the delivery numbers because they did come out today. And I saw a lot of people in the comments yesterday saying, hey, dude, are you worried about deliveries? And as I talked about in the beginning of this video, not really. Anytime that we're trading any algorithm, any trading bots, any script, any strategy that you're going to do, you are going to have to follow it to a T, because then it's no longer a strategy. It's no longer a standard operating procedure. an aircraft pilot cannot get into the cockpit of an aircraft, have his checklist, and then skip a couple of things because, well, he's just not going to do that today. If you have a system, you have to play the system to an absolute T. Because in all of the historical data that we're looking at, that is including all of the things such as earnings, deliveries, Fed decisions, and economic data. This is why I understand that I cannot predict the future, but that's also why I bet very small relative to my net worth, so that if something like this happens, it's not going to kill me. And this also means, which you have to understand, that if Tesla would have ripped 7% today, it wouldn't have changed my life either. I would have probably made about $7,000 on those calls, which would have been awesome. But obviously, that's not going to change my life. And I don't mean to say that, like I said, in an egotistical way, but I mean that you should not be trading with position sizes where if the stock goes up 7-8% tomorrow, that you are going to be overjoyed, that you're going to think that you're the best trader in the world. Our goal here is to be neutral at all times, to be detached from all of our emotions, detached from greed, but also detached from our ego. We know that just as easily as we can make money, we can just as easily get our teeth kicked in. And every professional trader and investor understands that to their core. So what are my plans right now for Tesla? Well, at this moment, we have pulled back, we did end up bouncing, and we have filled that gap. And all of these harmonics are still in play. So my personal thought is I'm going to set a stop loss here right at about 158. If we start to push our way back up into 160 and 182, that's awesome. If it doesn't happen, whatever. I'll lose the entirety of my May call, which is not going to kill me. Even an $11,000 loss, losing the entire trade is not going to kill us. We ended up making $14,000 today alone and $16,000 yesterday. So this is the biggest piece of the message I want to push to you guys. Position sizing is the single most important thing. Nobody on YouTube talks about it. They all want to give you the best possible technical setups, but it does not matter. If you do not use proper position sizing, if you do not use proper risk management, if you don't know how to actually detach your emotions, then it doesn't matter. You will never become profitable and you will most certainly never thrive in the market. If you guys want to learn how I separate my emotions, we have a free discipline trading / risk management course, which I will link down below, or you can just go to our website, thtcommunity.com. Thank you guys for all the support, and I'll see you next time.